This is a recap of what we covered in our Zoom meeting on Tuesday, March 31st at 9 a.m. If you would please get your textbook out and open to the specifically 13.4 on page 397, plus get your workbook open to 13.4. I'm going to walk through what's going on. I'm beginning with just a quick recap of the previous working togethers, and I would encourage you to rewatch excuse me, PowerPoints 1, 2, and 4 in review of what we've covered so far in chapter 13. I am skipping working together 13.3, which is filling out the tax forms, and we're also going to skip application 3, which is filling out the tax forms, just because that's not what we need to focus upon for distance learning. So first of all, this is working together 13.1. As a reminder to you, what you're seeing here is information that you are journalizing from your payroll register, which we learned last chapter, in which you are taking the total earnings, which includes hourly and overtime, as one debit to salary expense. Whenever you are journalizing the cash payment or writing a check to pay your payroll taxes, the account you debit is always the salary expense account. Then we are crediting in income tax payable, Social Security tax payable, Medicare tax payable, plus the amount of the net payroll as your cash credit. And that's how you journalize your cash payments journal. That's what we did in Working Together 1. Jumping ahead now to Working Together 2, this is where we figure out the employer taxes. Okay? And as a review, we would take the accumulated earnings from our employees. $7,000 is the amount upon which after which we will no longer have to pay either federal or state unemployment. So this is the form that we use to keep track of that, plus what is going on with the current payroll. So these accumulated earnings are what our employees have earned so far until this current payroll. Because I mentioned to you that magic $7,000 amount upon which we don't have to pay federal or state unemployment taxes, column 3 is used to figure, okay, what's the difference in column 2 and $7,000, okay? So for Nick, $7,000 minus $6,100 leaves $900 that he can be taxed upon. Because Evan is already over $7,000, we won't have to pay any fed or state unemployment for the remainder of this calendar year for payroll. Virginia was at $4,380, so we still need to pay unemployment taxes on $2,620 of her remaining earnings to get to $7,000. And Carrie was at $6,850, so if we subtract $7,000 minus $6,850, we get $150 left that we will need to pay taxes upon. Column 4 is we grab from our payroll register. This is the current total earnings, both regular and overtime, for both of these employees. What we're going to do is we're going to use that number added together to figure out 6.2% for Social Security and 1.45% for Medicare. These first two values are figured upon the current earnings. This is the employer taxes. So the employer happens to match what's taken out of your payroll for both Social Security and Medicare. Then what we're going to do next is we're going to figure out what the federal and unemployment taxable amounts are going to be. So we look at column 3 to see how much income we need to tax from for the remainder of the year. We look at the current payroll, and we look at the current payroll number. If there is still dollars left, we include all of that. So that's why it's $762.50 for Nick, because Evan already reached his max amount previous payroll, he's over $7,000. We're not going to tax him anymore for the remainder of this entire calendar year. If the dollar values, once again, in current earnings are less than what we will be taxed upon, we will take that entire amount. And because Carrie only, we will only pay taxes on up to $150, that's all we're going to list here, because after $150, the amount of taxable dollars would be over $7,000. So then what we're going to do next is we're going to add together all of the FUTA earnings, and we're going to use the total of that column to figure out what 0.8% is, 1152, and 5.4% for the state unemployment, what that value is. We add all four of these together, and now we are ready to journalize the employer. So the employee, when we journalize the employee, and when we pay the employee payroll taxes and payroll, we use salary expense. From the employer side, the first step is journalizing to our general journal the fact that these taxes will take place. We're not paying them yet. We only pay them once a month, and we pay it in the next month. So we debit payroll tax expense for the total of the four tax amounts that we figured above in that worksheet. So these four taxable amounts that we figured here, we are now going to credit because they are all tax payables: Social Security, Medicare, unemployment, and state. And remember, these are the employer taxes. So this worksheet gives us the dollar values that we will use for those four tax payables, and then we add all of those credits together to get one debit to payroll tax expense. Now we're going to skip working together and on your own 3, and now I'm going to walk through the final step, which is how to journalize your taxes when you pay the government. Okay, so in your book, when you look at Working Together 13.4, you can see that this payroll data is from the pay period ended March 31st. And for our purposes, we will always have 2 payrolls a month, semi-monthly payroll. So we're seeing the date paid, we're seeing the amount of Fed tax from that payroll, we're seeing the amount of Social Security tax, and we're seeing the amount of Medicare tax. And notice that it is the employee Social Security and Medicare. If we read through the first paragraph, it tells us when we went through that little worksheet, we figured out what we owed for federal unemployment tax was $515.52, and for state unemployment tax was $1,159. So our first step is to prepare a journal entry for the payment of the withheld taxes. We pay these monthly, so this will always be paid. So notice it says April 15. If you look at the date here, that means this would have been for the payroll of the month of March. It would be both March 15th and 30th added together. We're going to use check number 495 and journal page 14 for these taxes. So what we're going to do here is we're going to look at the information provided to us. You can see for in this case, the April 15th payroll, we are going to debit employee income tax payable. We are debiting the tax payables because we are paying them for $1,320. That's what was taken out of our employee accounts. Now notice that the employee Social Security tax was $1,331.76. Well, when we did that little worksheet, we would have also figured out the employer owes that same amount. So we add the employee plus the employer side. So that's why you're seeing the Social Security tax payable is double, $2,663.52. That's the employee $1,331.76 plus the employee $1,331.76. Same thing for Medicare. You'll notice the employee Medicare tax withheld was $311.46. We're going to add $311.46 for the employer side. So that's why you're seeing Medicare $662. So write in your notes, double Social Security, double Medicare. So you remember you have to do those times 2 or add the employee plus the employer side. And then we add these three figures together to get the cash credit amount of $4,606.44. The next step is to journalize the federal unemployment and the state unemployment amount owed, and it's giving us those dollar values in the introduction paragraph. We would have figured this out in the worksheet just like we did in 13.2. So the journalizing part is easy. We will be paying this at the end of the month. It tells us to use checks 522 and 523. We debit the tax payable since we're paying it. We credit cash for the amount of the check. We debit state unemployment tax payable, and we credit the amount of the check. So those figures either are given to you or you'll be using the worksheet that you prepare that will be similar to 13.2. So what we decided we're going to do for homework this week is we're going to finish the study guide and the applications. Also, please copy this worksheet information down. You can pause the video if you need to. However, I have also put all the keys in Schoology for everything, the study guide, the working together, the applications, and the mastery. So don't copy from them, do them, and then see how you did. You can correct your work. So I'd like to explain the applications now, and I'm going to jump ahead. Let's see, I guess I was right there. 13.4, application 13.1. Okay, here we go. So in your books, please jump ahead to application 13.1, which is on page 401. You are given the information from a payroll register for both pay periods August 1st through 15th and pay periods August 16th through 31. It's telling us that you're going to use page 10 of the cash payments journal because you are actually writing the checks to pay your employees. And when you do that, you also have to journalize your cash payments journal for the payment of all of these salaries and tax payables. Okay? So it also tells us to use check 692 and checks 708 for these two. So when you pay your employees, you need to journalize the payment in the cash payments journal. So if you bring your finger across the line for the August 15th, you can see all of the dollar values that you are using come right. You've done all the hard work when you've done your payroll register. So because this is the employee tax payment and payroll, the debit amount is going to be the total of the total earnings here. Then your cash credit amount is the net pay amount. And because we haven't paid these taxes yet, we're just journalizing them. You will journalize all all four tax payables plus the retire benefits payable, medical insurance payable, and all of those payables will be credits. All of these are the information provided. So the credit amounts are here. The credits of these 5 deductions plus the net pay cash credit equals the total earnings debit to salary expense. And you do that exact same thing for the August 16th to 31 payroll. That's application 1. Application 2 has you figuring out first the this worksheet to figure out what you owe, and this is going to be for both pay periods. So for this one, you're going to look on page 401 and you're going to fill in the accumulated earnings for March 31st, the total earnings for the 15th payroll, and the total earnings for the 30th payroll. So the prior accumulated earnings will go in column 2. The 15th payroll total earnings will go here, or go in column 4, and then the current earnings for the end of the month will go in column 8. And remember, $7,000 is the magic number. You will subtract the column 2 from $7,000 to get how much you'll be figuring taxes upon. You'll be using the total of your current earnings to figure your Social Security and Medicare deductions, and then you'll be using the total of the